let's move on and invite the management of Meghmani Finechem on our show. The stock gains after it's commissioned a 30,000 ton per annum capacity of CPVC resin unit in Gujarat. This plant is one of the largest of its kind in India. Maulik Patel, the chairman and MD of Meghmani Finechem, is joining us to discuss this value-added product plant commissioning that the company has done. Morning. Thanks so much for joining in. Could you tell us what is the revenue contribution that you expect and what are the margins of CPVC? We understand it's a high-value product for you. So what will be the margins and how would it compare?
Yeah, good morning. So CPVC in India, the market is going to increase and our revenue is, this is just commission the plant. So once the customer will approve and they will buy on a full quantity what they require, definitely our volume will increase gradually because we have just commissioned the plant, and Q2, I think probably all the customers will take a trial slowly and slowly they will increase the quantity, and probably Q3 onwards we will increase the sales in the CPVC, and we expect that this year will be at least 50% of the volume we can expect in this financial year, and the full year basis optimum level we can consider in the FY24.
So capacity utilization will be 50% in the second half of FY23?
Yes, second half of FY23 will be 50%.
And at full capacity, what can be the revenues you can generate?
So full capacity based on the current prevailing prices of PVC, we can expect around between 400 to 450 crore revenue in a full year basis.
Okay, so that is for the full year. Mr. Patel, one more thing, how much of an investment have you made into this just to commission this plant? If you can take us through that, and what is the margin that you expect on just this segment?
Yeah, so in this segment we are expecting, which is our company's EBITDA target is normally and the ROC we expect more than 25. So our revenue and the margin we will achieve around probably 28% plus or minus 2, which is in the company's guidelines. Same kind of revenue and the margin we are expecting in this product as well in a long-term basis.
When we last spoke to you, it was about the ECH, the AP chlorohydrin plant, which you had commissioned.
Right.
What is that generating right now for you?
Yeah, so ECH we have commissioned in the June. So right now it is also on all over the customers in US and in Europe and in India. We are selling trial quantity to all of them. So probably in the June we have started dispatching to all the customers globally. So probably we are expecting in the Q2, we are expecting the good orders from the Q2 onwards.
All right. So clearly, you're on quite an expansion spree. You had that ECH plant earlier. You have the CPVC plant now. Is there anything else that you're looking at in terms of expansion?
Yeah, we are coming with one R&D center next to our headquarters, which is in Ahmedabad, for the chlorotoluene and its derivative business, which is also completely import substitute. Right now, all the specialty chemical companies, which is growing, they import their raw materials based on China and other part of the world. So that will replace completely that molecule, which is, which will help to entire supply chain of the specialty chemical division in India.
I think your FY22 revenues were about 1,551 crore. Now, you've set a target of achieving 5,000 crore revenue by FY27. Could you give us how you will achieve it? How much could your revenues be in FY23, then 24, and 25 onwards till FY27? The path from 1,500 to 5,000.
Yeah, so 1,500 to 5,000, as I mentioned, ECH and CPVC on a full year basis will started generating revenue and reflecting in the financial year from FY24. And the chlorotoluene, which we are planning to commission in Q4 FY24, and R&D center, which we are also starting. So all these products, I think close to 3,500 crore revenue we can generate on a long-term basis, on a full year basis. And after that, we are couple of products we are continuously evaluating, which is completely import substitute right now. So we will announce when the time will come. Once we achieve the substantial quantity in the CPVC and ECH, once started generating the revenue from the ECH and CPVC, definitely we will announce more projects in coming times.
So just one question, of this 5,000 crore of target by FY27, what will be the contribution of ECH? Will CPVC be 400 to 450 crore? which is your full capacity? And what about this chlorotoluene plant, which will contribute from FY24 onwards? How much will that contribute?
So that will contribute close to 1,500 crore, all three products which we started recently along with the chlorotoluene projects.
So organically, you have to still move from 1,500 to 3,500, right?
Yes.
Okay. All
So
right.
along with this, we are also debottlenecking our chloroalkali plant. So that will also generate extra revenue, which is existing product.
Okay. Mr. Patel, if you can just get back to the CPVC plant, can you tell us, just to start with, what is the kind of market share that you envisage in this segment, in the CPVC segment? We know that India sort of imports a bulk of it, of course, but what is the kind of market share that you're looking at?
See, currently we just started. India is importing completely. 95% of the products are imported completely, and India is continuously increasing. So currently India's demand is 140,000 ton, which is world's 50% demand. So which is very unique molecule where India's market share is 50% of the world consumption. I think I would say this is the only molecule where this kind of consumption on a global data we have, and this is continuously increasing in India. So, and the global capacity, it is not increasing because major consumption is only in India. So I think Indian company will get advantage even based on today's consumption, as well as in the future expansion of all the existing pipe manufacturers, which they are also growing as a double-digit growth is expecting in coming times.
What will your margins be by FY27?
Sorry?
What will your EBITDA margins be by FY27?
See, FY27 we are expecting definitely in 5,000. Definitely we are expecting more than 25%.
Okay.
Okay, more than 25%. Just one last question. You said that customer trials should start in Q2. Are you already in touch with some of them, and can you tell us who your first few customers are likely to be?
See, in India, as I mentioned, all of them are ready to buy from us. But normally this product is started with a small quantity, then they take a bigger trial lot, then they eventually started getting the more orders in the continuously. So this the Q2 we are going to face the same thing. Some of the customers we already sent the trial lot. Now we are getting the second trial in a bigger lot. We are sending it right now. So, all the customers like, bigger customers, all big customers, like they are contacting us right now, and we are supplying them on the trial basis right now. So customer like, all the customers, we have, I think 90 to 100 customers right now in India who are manufacturing CPVC and CPVC based pipe and fittings.
Maulik, we leave it at that. Thank you very much for joining in. The stock is up 4% today. It's up 47% in the last 3 months. And Meghmani Finechem has commissioned a new CPVC plant, which at full capacity can contribute about 400 to 450 crore of revenues for the company, hopefully next year, FY24. Get into a short break on that note. More on the markets when we return.